RBC Capital Markets Head of Equity Strategy, Lori Calvasina, here at Post 9. She's got an S&P year-end target of 4250. See, I thought of you as more on the optimistic camp, but now that we've surpassed your target, what do you do?
Well, you know, it's funny. I mean, I keep getting accused of being a bull because I think we sound more bullish than a lot of other strategists. And look, I think targets are tricky, right? I've told people we have sort of 6 different models we look at, and 3 of those are pretty conservative, and 3 of those are pretty optimistic. And if you look at the more bullish ones, the valuation one in particular can get you to 4,700, 4,800 pretty easily on the S&P. There's another one that's been more constructive, our sentiment model, which was really bullish to start the year, and that one's actually starting to flash some yellow signals. So it's not quite flashing red just yet, but I've been telling clients I've been meeting with recently, I expect it's going to get there pretty soon. So I think the cross currents right now are just incredibly complicated.
What about what we were talking about, the outlook for the Fed, which is so key in determining how, I guess, you have to forecast the market these days? Do you think the market's got it right?
I think so. I mean, I think the Fed doesn't generally want to surprise markets, so you do have to look at market pricing heading into these meetings. But I think if you go back to the debt ceiling, there was all this confusion, right, about why the market didn't collapse. And I think that the market ultimately liked McCarthy trying to push back on spending. And in talking to a lot of investors, they want the fight with inflation won. So at least on the equity side, I think people are like, okay, if we have to get another hike to, you know, sort of show that we are serious about inflation to make sure we're really beating this thing down, I think equity investors are actually okay with that.
You're talking about September as well as July?
September, I don't think it's clear. I think that's more data dependent. And when I talk to investors, you know, that's sort of the approach they're taking as well. They're not really expecting necessarily 2. But 1, I think, is pretty much baked with a lot of the equity folks I speak with.
I mean, last time you were on with us, July 5th, not that long ago, you were sort of talking 4,600 as the tip top for your bull case.
Yeah, so we actually updated our earnings model, and we pushed up our earnings number, I think it was around 213. We pushed it up to 219. We updated our valuation model, which is actually dependent upon inflation expectations. So you had some movement on both of those, and I think the number was like 46, maybe like around 34 or something like that, and it pushed it up to like 47, 40 something. So it's pushed it up by about 100 points. It's just the math on the housekeeping on the models.
But again, just listening to you, I mean, are you more cautious or not? I mean, you know.
I think that through year end, I think that the valuation and the earnings backdrop is supportive of further gains. There are 2 things that are bothering me. You know, I think people are starting to chase this rally a bit too much, and we see that in the AAII data. You typically want to sell the market when it hits 30% in favor of the bulls, and guess where we were last week? 29.9. Okay, now I need to see it go to that 30% on a 4-week average. We've had a bunch of 20% numbers. I feel like we're going to get there before the end of the year. Now, it's possible we could sit there for a while and we could be having the same conversation in January, or we could see some big profit taking before that. The other thing that's starting to bother me, and we wrote about this in our weekly today, is the money flows. So coming into the year, everyone said, hey, all the money's going to go into bonds, not equities. Well, guess what? That lasted for a few months, and now we started to see all this money going into equities. But that's actually starting to fade if you look at the large cap part. So we had been seeing geographically money going into the U.S., Canada, Japan. That's all starting to ease up a little bit in here. So we're starting to lose some of that money flow support as well.